Good afternoon. It's Brian Shannon from AlphaTrends.net. Today is Tuesday, the 13th of January, 2009. We had a very choppy session here today, but at the end of the day, we did finish with a gain. The NASDAQ was up a penny. We did have 1,633 advancing stocks and 1,451 declining at the end of the day as the market probed that level that we're looking at as far as the next potential level of support, which was 29 and a quarter, and it held there. But we're still really indecisive here with these moving averages crossing back and forth, and very cautious with a declining 5-day moving average. When you back it up to the 30-minute time frame, this level is again that 29.25 area that we were looking at, and if we break and hold below there, then it looks like we're still headed for a test of the 28.5 level. And looking at the weekly time frame, you can see that that's pretty much, I think, the place where a lot of people will give up on this market, and we'll see a very quick and severe sell-off. So danger remains very high in this market. It's trying to stabilize in here a little bit. We've got options expiration on Friday. We've got the presidential inauguration next week. So there's a lot of cross currents, macro cross currents. We've got earnings coming out and that sort of thing. So the best thing you can do is, I know it sounds like a broken record, and it is, but the best thing you can do is just to continue to manage risk. Right now, we're going to need to see this market get back at least above 30 before we can have any confidence with some long positions. That will put us back up above the 5-day moving average, which maybe will flatten out, and above this most recent level of resistance right here, which was prior support. This pattern of lower highs and lower lows remains intact. So, best case scenario, as you could say, we're starting to turn more sideways. And again, we were up a penny today, but the volatility is the real story here. It's just amazing volatility today. It's very choppy. If you weren't, it's very choppy, and you had to be extremely disciplined, is what I had meant to say there, in particular last hour. Oil was up today, up $1.19. It finished, it's still obviously in a horrible downtrend, maybe stabilizing here a little bit above this level, which is very similar actually to that 29.25 level in the NASDAQ. But basically getting back below this level here at about 30.5, I think puts the lows in jeopardy. That perhaps there'll be a test there. This market is beginning to neutralize a little bit as well. When we look at the 10-minute time frame, we see all these moving averages crossing back and forth. We've got the 5-day moving average right up around $32 a share. So I think you can look at 30.80, and then just basically this level, 30.75, 30.50 to 30.75. Breaking below and closing below there could be a problem for oil to continuing to go forward. But we're at a point where it starts to make sense to look for the potential that if this market jumps up above the 5-day moving average, maybe we'll see that 5-day moving average flatten out, and then another rally begin to emerge that could bring us back up maybe towards that 50-day moving average, once again up near the $40 level. The volatility is amazing in here. I don't suggest buying and holding, but when these markets start to turn back higher again, and we have that pattern of higher, this could be a higher low, we get a higher high, we get that 5-day moving average flattened out, you could have some upside in oil, so it's worth keeping an eye on. The financials were up 15 cents today, so this group avoided further meltdown here today, but still remains below that important level, which is $11.40. If it can get back above and hold above that $11.40 level, that could be the catalyst that brings buyers back to this market for more than about 20 or 30 minutes at a time, which is what it seems like all these rallies fail that quickly. But here again, this is the $11.40 level. If we can get above that, then perhaps this market can recover slightly. It's encouraging to see we did see a higher low today. We've got a little bit of resistance up here at about 11.25. Still got a steeply declining 5-day moving average, so I don't think that any rally attempt that could hold will probably come tomorrow, but maybe on Thursday or Friday. But it's still obviously a badly damaged market sector. Right? If it stays below this 11.40 level, I think we're setting up for a continued move down towards here. And we've got the 10, 20, 30, 40 week moving average all heading lower. Odds do not favor a turnaround, but if it can get back above that 1140 level, then it may catch the shorts off guard. And the last few weeks in particular have shown why it's essential to just have flexibility of opinion in this market, and don't be too rigid about about your market belief, because it can get extremely expensive if you stick to it too long when they're moving against you. The semiconductors were up 16 cents, or just about 1% here today. We're still above the key level in here for this market, which is about that $16.50 level. Breaking below there is the very similar danger level to Nasdaq 100 at 2850 or so. So this is the line in this. This is the last level of defense, basically, I think, for the buyers in here. Getting below and holding below there probably for more than a half hour or so would really put this whole market back in jeopardy. We've got kind of similar to that 1925 level, and the level I pointed out in oil is the 2925, and this is similar to the 2925 level on the Qs right here. These prior highs near about 17 have been acting as support in the short term. The more important level is just below, though, at 1650. Breaking below, holding below that level could be a real problem. Where I think we could see a little bit further upside is maybe above this level here. This is about $17.70. We've seen the resistance there. We've got a higher low in here today, just barely, but we did finish with a gain. So, we can look at this as possibly part of the healing process. But when you look at the longer term time frames, as bearish as they look, you just cannot be too excited about the long side for very long. The stronger group today was the Russell once again, and that was up 1.3%, gained 62 cents. The weekly time frame obviously continues to be a real reason for concern. The bigger, more important level in here is just below that $46 level. I think breaking below that $46 level paves the way again, like I said yesterday, for maybe a test of 44, and then below that, we'll see. Who knows? We've still got this declining 5-day moving average. We've still got a pattern of lower highs and lower lows. So we can't get too excited about a 1% gain when the market is in such a severe downtrend. The lower highs here on this 10-minute time frame, and lower lows right up till the end of the day. We have our first potential reason for encouragement here, which is this higher low. Now we're going to have to at least get back above this 47.75. Realistically, the better trades are found on the 1-minute time frames in here, and it's a day trading environment, continues to be so. So just keep an eye on these levels here. These are the big levels for the market, that if it breaks below there, if you're still holding long positions, you're taking way too much risk, in my opinion. The S&P 500 came down towards the lower end here again of this range, and obviously the 85 area is the key level, that if this market breaks below it, then that's going to put this weekly time frame back to a lower low here, and sets us up for a potential test of the lows, or somewhere down near there. At least obviously the 82 level is the next bigger level in the I don't know why I keep saying semiconductors, but the SPY, breaking below 85, then it looks like 82 would be our next test, and then somewhere down, in testing near these lows, somewhere in here. It just, you can't predict necessarily, but you can look at it and say, as long as the market makes lower highs and lower lows, there's no reason to get involved unless you're scalping on these 1-minute time frames, which if you follow me on Twitter, that I try to do, but I do so with very tight stops. I tried the Nasdaq calls once again today, and sold those when it became apparent the market wasn't rallying. But taking call positions in the front month, and at the money is a way for me to limit risk. A lot of people look at it and say, wow, that's real risky to buy these calls that expire on Friday that are slightly out of the money. To me, it's a way to minimize my risk exposure, because the trading in the NASDAQ got so choppy in there that I figured if it was going to rally, that it was going to take people off guard. And I got them, I got involved in the calls in here and got out of them as they were breaking down for a very small loss. And again, it's always just risk management that'll keep you here for trading the next day.